What is up, YouTube? I'm Adam Odell, Chief Investment Strategist at moneyandmarkets.com. I'm joined this week once again by my research analyst, Matt Clark, and we're here for another episode of Ask Adam Anything. I believe we have a question this week from one of the subscribers to my Home Run Profits options trading service, which I've been running since 2012. And it was just a good jumping off point for explaining some of my thoughts on how to manage positions that are going against you, because believe it or not all of our trades are profitable. If you've been trading for a month or two, you should know that. But really, I think the mark of a professional versus an amateur is what you do when things are going against you. So, Matt, I'll let you go ahead and lay up the question, and then we'll get into it.
What you're saying is that not all trades are winners. Did I hear that right? Because I don't. That's new to me. I don't know what this is you speak of. That not all trades are absolute gangbuster winners. I didn't know that.
Some people say that this is a game for masochists, people that like the pain. So I can certainly identify with that.
I think there's some validity to that. We had a lot of questions have come in, and it's kind of I like this kind of zero in on ones that have not really broad, but can speak to a couple different things. So, and this one came from Dustin, who emailed us and said, "Hello, Matt and Adam. With Manchin." And he means Senator Joe Manchin of West Virginia, someone who is probably who Adam is very familiar with, being from West Virginia. With Manchin shutting down the BBB, which is the Build Back Better Act bill, until January, will this harm or help the XLE option, which is the ticker XLE, that has been hindering? I think you meant hindered already. And then the second part of that is, should I buy more since it's getting hammered, or hold to see what incurs? So I think let's try this in two different veins here. First off, let's talk about not the Build Back Better bill, because everyone knows what that is, but let's talk about its potential implication with XLE, which is the Spider Energy ETF, and that option. So we'll talk about that first, and then we'll get into the second part of Dustin's question.
Yeah, so it's obviously we have a lot of our subscribers that write in and they say, I've read X, Y, and Z, or I've seen X, Y, and Z on CNBC. And it's a natural inclination to feel that the financial news, or just the news in general, which now runs 24/7, is market moving. I hate to say it, but most of the time the news is not market moving. Occasionally, if there's a biotech firm that gets FDA approval, that can move that particular firm or the sector for some period of time. But in general, especially with what happens in Washington, we here at Money Markets are not making trades based on the news flow. We have more, well-grounded methods in momentum and in multiple disciplines, looking at the factors that drive market beat and returns. So we largely tell our subscribers, and largely hold ourselves to this as well, to not follow the news cycle too closely, or not to make knee-jerk reactions on that. So, one way to answer this question is, do I think that Manchin's kind of holding up of the BBB bill? Is that going to change the outlook medium term or long term for the energy markets, for the commodities or material markets, for the infrastructure sector? Basically, no. I don't think that over the short to medium term that's going to have any major effect on that. Now, this question actually came from a subscriber of my Home Run Profits service, as I mentioned. And in that service, we trade options. Options are assets that have an expiration date. So unlike a stock that you can buy and hold for as long as the stock exists, an option contract expires on a certain date. Now, typically, I've been doing this exact service for 10 years now. Typically, we stay in our trades for about 3 months. The momentum system that I developed is best at targeting high probability moves within a 3-month window. And if it's anything shorter than 3 months, it's not as accurate. If it's anything longer than 3 months, it's not as accurate. So that really is our sweet spot. And we did make a play in mid to late October. It was October 19th, I believe. In fact, let me pull up the chart. Let me share my screen, Matt, and I'll show you the chart and show viewers as well. All right, Matt. So you should be able to see a black and green chart here from TradeStation.
Yep.
Okay, so so I've marked this first vertical line here. It was on October 19th of last year. And as you can see, this is the XLE, the Spider Energy Sector ETF. and it had been rallying since September, and it made a new high in throughout the middle of October. So my momentum system picked up on that market beating momentum, and I actually recommended a call option purchase to my subscribers on October 19th. And what you can see here is we actually spent the first 2 or 3 weeks, the XLE just traded sideways, and then we got a pullback, and then we got an even sharper pullback into mid to late December. And this question from Dustin came in this week, basically between these two lines as XLE was hitting its low. And so the position was down. It's an options position, so it was down a good bit. But again, my system is designed to find high probability plays over a 3-month period. And what I found over the past 10 years is that you cannot judge a position after 2 or 3 weeks, or even after a couple of months. You really have to give it that full amount of time to reach its potential. And what you can see beyond these vertical lines is basically the price action of XLE since that December 20th bottom. It's just absolutely been screaming higher. It's rallied. It's made new highs very strongly. Our option position, we just took profits on a portion of it yesterday for over 50%, and we'll be holding the remainder portion for targeting returns of 100% or more. But one lesson in this is that you can't give up on a position. If you intend to hold it for 3 months, you can't give up on it if it's showing you heat after 1 or 2 months. So that's one message there. The other part of Dustin's question that I picked up on was he was asking, and we actually responded to him specifically in real time, but directly rather. But one of his questions was, should he add to the position or just hang tight and see how the position unfolds? And for me personally, you have to make a decision for yourself and your own trading methodology. But for me, with an options trading strategy like I run in Home Run Profits, position sizing and money management is of ultimate importance. With an option position, when you buy a call option, if it goes sour on you in that 3 months, you could lose 100% of the premium that you invest in that call option. So really your best risk management technique is to only invest a small enough portion of your overall account into any one trade so that no one trade can make or break you. If it goes against you, you're only losing a small portion of your account, maybe 1%, 1.5%, 2%. And so that's really the risk management that I preach as it relates to options trading. So that's why I do not typically recommend adding to positions when they're down. Let's say we buy call options. We bought the 59 strike call options on XLE. Let's say they were down 50 or 60%. It's enticing to buy into more of those call options when it's down. But then, in my opinion, you would be over allocating. So if you allocated 2% of your account to that trade at the beginning of it, and then you want to add additional funds to that trade 2 months in, then you're going to be allocating 3 or 4% of your capital trading account to that, and that would be an over allocation according to your plan. So I do not typically recommend adding to losing positions, particularly with options trades, but I do recommend holding on to them for the full time that you intended to. So we didn't get nervous and sell out after 2 months and try to retain some of our premium. I always tell my subscribers, when you're buying an option, make sure you're buying only enough that you are willing to lose that amount of money if things go sour on that one trade. So that's how I would answer Dustin's question, and also use that as a jumping point to kind of explain what we do in Home Run Profits.
And it is, I should note that hopefully up on one of these top bars here of the video, we'll give you some more information on how you can learn more about Home Run Profits. But it's a great service. Options, Adam makes it very simple. Options can seem to be rather daunting when you first get into it, because there's just a lot of lingo and different things that you have to not really understand, but at least have it in presence of mind. But Adam does a great job explaining it, making it very, very simple for you. So it kind of takes the fear factor out of the options trade that a lot of people get very scared of. I found it interesting, Adam, that you mentioned, what happens in Washington, shouldn't necessarily be reflective of what you do in the market. It doesn't with us. I face that challenge all the time. I've got the marijuana market update, and I get a lot of questions all the time about the cannabis market and cannabis stocks to buy. And if there is a sector of the market that faces the most headwinds from Washington, it would have to be cannabis, because everyone is just waiting on the edge of their seats to see that, that federal legalization to just make the market legal and then pop those stocks to all-time highs. But it is true, to trade on news headlines would just cause your head to spin. As a former news guy, as a former 24-hour news guy, I can tell you it is a frantic pace. And if you are trading on that, then you're not stopping to smell the roses. I guess that would be a way to put that. So good question, Dustin. Certainly appreciate you asking it. And I think Adam's dead on here that, first off, buying positions that you already hold that are in low terror, that are dipping. I'm kind of with Adam. I'm not a big fan of that. It's very tempting just because you think you could see the larger gains. But I think you've got to just keep a very balanced portfolio. And Adam does a great job of walking you through that with Home Run Profits, as well as with Green Zone Fortunes, which is our service that Adam, Charles Sizemore, and myself help along with the rest of our team to give you that one stock pick every month that we firmly believe will break the market by at least 3 times in the next year. So a lot of things there, a lot of things to unpack. Certainly glad that, Dustin, you asked the question. If you do have a question about the broader market, options, cannabis, dividends, you name it. If you have a question, you have 2 options to get it to us. You can comment down below here on YouTube, or you can email us. The email address is feedback@moneyandmarkets.com. We'll try to put that email address right down there. Adam, Charles, and I would love to see your questions. We'd love to dive into what you're asking. Love to hear what you're seeing in the market, what you're experiencing in the market. So if you have if you have a story to tell about your experience in the market, we'd love to hear that. And if you do send us a question and we do use it in any one of our videos, then we will try to hook you up with some Money and Markets gear, like maybe a t-shirt, sweatshirt, hats, all that kind of cool stuff. Still hammering on the boss to finally put in a full day's work and get us some more gear. He'll get around to it, I'm sure, whenever he feels up to it. But Adam, that's all I have. Dustin, you had a great question, and we'll try to get you out some Money and Markets gear. And I certainly do appreciate that. Adam, thanks for your time, and definitely look forward to doing this again next week.
Sounds great. Talk soon, Matt.